Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now this non-farm payrolls report that we had on Friday certainly had a bit of an upheaval to the market sentiment. There was significant volatility Friday afternoon. There's always significant volatility around payrolls anyway, but this was fairly more than normal. It was a surprisingly weak data point across all the report really, with the headline data much worse than expected. Also, we saw the deterioration or continued deterioration in labour force participation rate, and also average hourly earnings, which were also again disappointing. So across the board, pretty much the expectation has been taken that maybe this has an impact on the Fed monetary policy and not being able to hike rates in 2015 at all now. So serious questions are now being asked, and the market is having to reprice this sort of monetary policy expectations now. The initial reaction on Friday was negative, but then the expectation that perhaps the Fed will not be able to hike rates, certainly in 2015, but possibly even further out. So how has that moved the market sentiment? Well, risk appetite has improved, and there's been a big turnaround in the market sentiment. Strong gains on Monday morning on equities in Europe. Question mark as to how long this can continue though, because obviously the overriding aspect of market sentiment is negative at the moment. You've got China, which continues to play a significantly negative role in markets, and also now the US is deteriorating as well. So there's not a great deal really to be positive about, and I don't know how long that this rebound in equities is going to last for. Now, obviously, we're looking out for Treasury yields as well. Treasury yields spiked lower on Friday. They've rebounded slightly, but still, again, they look under pressure to the downside. So still, the market seems to be sort of a little bit cautious, I think, even though we've had this strong rebound in equities. Now, throughout this week, we've got earnings season starting to come through, so that is a bit of a welcome distraction, or is it? Because this is we're going to be looking out for Q3 earnings, whereby we're going to be seeing the impact of the strong dollar on US earnings. So that will be interesting, and exactly how the market reacts to these earnings that, to be honest, have been revised lower quite significantly. So is that revision downwards enough to justify positivity coming out of the earnings season? So it'll be very interesting. That starts on Thursday with Alcoa this week. So in Forex markets, well, the key moves that we're seeing is this dollar correcting. Again, how long this lasts for remains to be seen, because we've had no real technical breakout yet on the dollar, or break lower, I should say. In terms of euro dollar, still stuck range bound. 113 is the big resistance there. Near term, if it can break through that, it'll go towards the range highs at 114.65. Cable's an interesting one. That's turned the corner now. Technically speaking, there is an improvement on the daily charts. Now the UK services PMI slightly dragged cable lower a bit early doors today, but still the improvement is there on a technical basis, and if it can move above sort of the resistance band 152.40, 152.80, there is an upside move potentially in that chart. Dollar yen still range bound, still showing no real signs of a breakout, and very sort of indecisive trading in the dollar yen. Very short term is the way to play dollar yen, I would say, but it's very difficult, and you don't really know which way dollar yen is going to break, so keep those trades short term. So in terms of indices, well, we've had the Wall Street rebound on Friday, which has certainly improved sentiment. That has impacted across Europe, and the impact has been that the DAX is rallied quite sharply. 93.38 is the resistance DAX needs to break through. Otherwise, I think that is just another dead cat bounce potentially on this market. FTSE is looking a little bit more advanced in its recovery. Certainly, the resistance at 52.85 is still there, and it needs to be broken to the upside. If that were to be seen, then that would be a technical upside break, and that would certainly improve sentiment, but that is a key resistance there on FTSE. For the commodity prices, well, we've seen gold, sharp rally on gold on Friday. Big move higher, still within that big bear trend though, so it could again be another chance to sell this. It already seems as though that the gold price is sort of rolling over a little bit, and beginning to lose a bit of that upside impetus in that rally. So is this a selling opportunity on gold? The oil price is still, I believe, a gauge of sentiment for these markets. The WTI, for example, above 43.20, on Brent crude is above 46 is the two key supports there. Those still remain intact, and whilst they do, I still see that there is an element of positivity that you could see from gaining from these oil markets. So for the rest of this week, what are we looking out for in terms of the economic calendar? Well, we have ISM non-manufacturing PMI for the States Friday afternoon. There's expectation for 57.7, down from 59, so a slight deterioration there, but considering how the UK deteriorated sharply, it'd be very interesting to see how the US copes in terms of its services PMI. Now, for the rest of this week, mainly looking out for monetary policy statements. We've got monetary policy updates from the RBA, the Reserve Bank of Australia, the BOJ, the Bank of Japan, and also the Bank of England. None of those are expected to be moving on rates at all. Again, even then on the Bank of England, no real change of the voting makeup either for 8-1 in terms of the MPC. So not a huge amount expected out of those meetings, but still there is a very slight possibility with Japan moving into deflation that perhaps the BOJ could do something interesting in terms of easing. And on the rest of the week, like a couple of really small aspects, such as Canadian unemployment, and also the Fed meeting minutes of that meeting that we got so much out of already. So few aspects to look out for this week, but the main trigger will be how the markets continue to react to this non-farm payroll data. So I wish you good luck in your trading today and throughout the week, and I'll speak to you again next time. Thank you.